Here are 4 dividend growth focused stocks that have grown their dividends by double digits over the past 3 to 5 years and that have also recently grown their dividends by 10+%. So we'll be jumping into 4 different stocks that I own that meet this criteria and that I think will continue to grow their dividends by double digits for the foreseeable future. Oh, and also I'll be sharing a list of 14 other stocks that have grown their dividends by 10% over the past year, just to throw some ideas out there. But yeah, let's jump right into it, starting off with a good old friend in Home Depot. Now, Home Depot is a big time retailer with an incredible business model and moat, and their only real competitor is Lowe's, which is another fantastic company and could have also made this list, but I went with Home Depot since it's the one in my portfolio. But anyways, back to Home Depot. To me, this is one of the few retailers that can compete with Amazon as a brick and mortar business. A lot of people, when they're making home improvement projects, they're gonna wanna go to the store and see the product in person and have the ability to buy that product and install it the same day, which I think is an incredible advantage for Home Depot. Now, looking at the fundamentals, the earnings and free cash flow for Home Depot have been going up and to the right over the past few years, showing really good growth. Now, speaking of growth, I do think that there's still more room for Home Depot to continue to grow in, especially in the DIY segment, as well as their digital sales, as those continue to rise as well. Alright, so now let's talk dividends. So Home Depot has been paying and growing their dividends for 11 consecutive years, going on year 12 now, which is an excellent track record, but let's take a look at the more important dividend growth rate. So for the past 5 years, their annual growth rate is a ridiculous 20%, and over the past 3 years, their annual growth rate is at a 19%. And for the past year, they grew their dividends by 10+%, and now in 2021, they just raised their dividends by another 10% going into 2021. Now, moving on to the dividend yield, Home Depot has an average starting yield of about 2.2% over the past 4 years, and their current yield right now is at about 2.6. Now, Home Depot rarely trades above a 2.5% yield, so this is definitely an attractive starting yield for Home Depot, at least I think. Okay, so talking earnings per share, for the next 4 quarters, Home Depot is set to do about $12.65, and that puts them at a healthy payout ratio of 52%, which is in line with the company's 55% payout ratio target. Now, in terms of multiple, the 5-year average PE is at about 22 on Home Depot, and right now it's trading at about 20. I do think that Home Depot is decently priced right now, and I actually have been buying some shares over the past few days. Now, for me, Home Depot is going to end up being a core holding in my portfolio, especially if they continue to raise their dividends at double-digit clips. But it's not just the dividends, there's lots to like about Home Depot. They did just post amazing 2020 numbers. Their digital sales grew by 83% in the last quarter, and I do believe that they still have room to continue to grow. Now, it's not all perfect, as margins did take a hit in the last quarter, and 2020 had some insane growth numbers that year over year in 2021 might make those results in 2021 not look so good. But again, it's still a good stock overall and a stock that I like. Next up, we got NextEra, and NextEra is the largest player in renewable energy, which is the direction the world is going. They also have a $55 billion investment plan to continue to improve their infrastructure and move into clean energy, which is one of their growth drivers. Now, let's talk dividends. NextEra has been paying and growing their dividends for 25 consecutive years, going on to 26, and now they are a member of the Dividend Aristocrats. And as far as dividend growth, over the past 5 years, their annual growth rate is at a 12%. Over the past 3 years, annual growth rate of 12%, and over the past year, yes, you guessed it, another 12% growth rate. Now, for 2021, they did already grow their dividend. It wasn't by the 12%, but it was by 10%, which is very nice nonetheless. Now, moving on to dividend yield, NextEra has an average starting yield of about 2.4% over the past 4 years, and their current yield right now is just slightly above 2.1%. And this basically shows that there still is a premium being paid for NextEra, and we can also see this on the earnings per share. Earnings per share for the next 4 quarters is estimated to be at about $2.50, and with their payout at $1.54, their forward payout ratio is actually pretty impressive for a utility company at 61%. But back to the valuation and the premium that NextEra has. NextEra typically trades at an average multiple in the low mid-20s, but their valuation is probably going to be more in line with a 25 forward PE. And right now, at current prices, the stock is trading at a forward PE of about 30, which again, I think is a bit of a premium. I would much rather buy this stock at a 22, 24 forward PE. But then the stock would have to drop a lot to get to those prices, but it might not drop to those prices anytime soon. Now in my portfolio, I have already started building out my position. I got in at about the $80 price point for NextEra. Definitely a little bit impatient in my part, but I also do believe that if you wait for the perfect price to get into a stock, you might just never get into that stock. So I am willing to pay a premium, but best believe if the stock starts to come down like it has over the past few weeks, I will be averaging down my position and picking up more shares. But over the long term, I do like NextEra. It's the largest renewable power generator in the United States and has a clear investment plan for the next few years. However, they can be hurt by rising interest rates, and you are paying a little bit of a premium getting into this stock even at the $70 price point. Next up, we got American Tower. Now, American Tower is the biggest 5G play in my portfolio as they lease out their cell towers to the big telecommunication companies like AT&T, Verizon, and recently now T-Mobile. And speaking of their leases, they're for the most part long-term, non-cancelable leases which provide lots of consistency to the earnings, which then is paid out to shareholders in form of a dividend. Now, American Tower is a dividend monster with quarterly dividend increases. Yes, I said that correctly. Quarterly dividend increases. Now, as far as track record, American Tower has been paying and growing their dividends for 9 consecutive years. As far as their dividend growth, their 5-year annual growth rate is an insane 20%. Same deal over the past 3 years, and for the past year, I don't even have to say it. Moving on to the dividend yield, American Tower has an average starting yield of just under 2% over the past 4 years, and right now they actually have a starting yield of 2.4%, which is a very attractive yield for American Tower. Kind of like Home Depot, this could be a decent buying opportunity to get into American Tower. And we could also see this in their funds from operations. For the next 4 quarters, they are estimated to do about $9.19, and that puts them at a 52% payout ratio, which shows that they can still continue to grow that dividend each and every quarter. Now, when it comes to their 5-year multiple, they have been trading at around a 22 price to FFO, and actually right now they're trading at about a 22 forward price to FFO. Now, this isn't the biggest discount, but if shares continue to slide under 200, I think the stock becomes just that more appealing. And as far as American Tower in my portfolio, I have already been buying into this position, and like most of my holdings, I got in a little bit too early, but I always end up averaging down when the stock does come down after I purchase it. And when it comes to averaging down with dividend stocks, it's actually not that bad because as you're averaging down, you're increasing your dividend income at the same time, so it's not too bad. And there is a lot to like with American Tower. They are a strong 5G player in the 5G space, and they have these long-term leases that provide reliable revenue streams for American Tower. Now, one negative point I will say is that a huge chunk of their revenues are coming from the big 3 wireless providers in AT&T, Verizon, and T-Mobile. Last up, we got Domino's Pizza, the #1 pizza chain in the United States in terms of revenues, and they also generate solid earnings and free cash flow. And they're always in the forefront to improve their pizza quality and pizza delivery experience, which is some of the reasons why I really like this stock. Now, in terms of dividends, Domino's has been paying and growing their dividends for 7 consecutive years, and now they're moving on to their 8th year now. Their dividend growth has been very strong with a 5-year annual growth rate of 20%, similar to American Tower. Their 3-year annual growth rate is at about 19%, and then this past year, they did grow their dividends by 20%, and now moving into 2021, basically expected at this point, they did raise their dividend by 20% going into 2021. Now, Domino's Pizza has an average starting yield over the past 4 years of under 1%, and currently right now at current prices, you could get Domino's Pizza at a 1.14% dividend yield. This is another similar story to Home Depot and American Tower, a really nice starting yield for Domino's Pizza, at least at these prices. Now, in the earnings department, for the next 4 quarters, they are projected to do about $12.90, giving them a payout ratio of under 30%, which is solid for them to continue to grow that dividend. Now, their price to earnings over the past 5 years has been in the mid to low 30s, and buying this stock under a 30 seems like a fairly good deal to me. They are trading at a forward PE just under 26 right now, but I will mention that the past 2 quarters for Domino's have been misses in the earnings department, so that's definitely something to consider. Now, in my portfolio, we have the usual buying too early, as I got into Domino's at about the 380, 370 price point, but I have been averaging down, and I will be picking up a few more shares at these prices. I really like Domino's over the long term. I love what they have done with their brand name and what they're doing in the pizza industry. However, I do wish they had less debt on that balance sheet. They do have pretty high debt levels for a pizza company. And also, similar to Home Depot, 2020 had some great numbers that will probably make 2021 year-over-year numbers look a bit soft. But that's pretty much it. Those were the 4 high dividend growth stocks that I actually own. And like I said in the beginning, here is a list of 14 other stocks that have just incredible dividend growth rates. And I do like actually most of the stocks in this list. However, there are a few stocks that I have not looked into, but I did include just because of their dividend growth rate. But yeah, just a little list to give out some ideas. That's pretty much it. Hopefully the video was helpful, and thank you so much for watching.